Good afternoon and welcome back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from Philadelphia at Nasdaq's and Villanova's School of Business ETF Synapse. We're focusing on collaboration, research, and academia within the ETF space. Joining me for this segment is Jim Ross. He's Executive Vice President at State Street Global Advisors and Chairman of Global Spider. Thank you so much, Jim, for joining us.
Thanks for having me, Jill.
Titan in the ETF industry, right? What are you looking at? What's the most valuable thing as one of the largest ETF issuers for you?
I think what we look at a lot is really where are the investment trends going and where is the client money flowing? Mm-hmm. So kind of in what different market environments, we're trying to do some research as to how can we, getting into that predictive analytics world, understand what clients are thinking about so we can be in front of them with good, thoughtful ideas. Right. At that point in time, because that's really when you want to be in front of them.
So you just wrapped up your fireside chat with Nasdaq's Chief Marketing Officer and also with Invesco. Again, two of some of the largest issuers that are out there. What were some of the key themes that you discussed on that panel?
I think we discussed a lot of different themes. We talked a little bit around ESG and ESG investing and how that's really, really significant in Europe today. We're coming to, I think, to the U.S. and coming to ETF soon. And actually, we have some current ETFs that are ESG themed around gender diversity and around carbon and low carbon footprints. But I think so that was one of the themes. Another one of the broad themes, which is really how investors are using ETFs and how the global demand continues to grow year over year.
How important is ETF research? How are you valuing that? Because it's interesting. It's rare that you find a conference that focuses exclusively on academia and research. And we have a number of PhDs walking around here today. How important is valuable research to the industry right now?
I think it's extremely important. I mean, the investment management industry was built on academic research in many cases. So from that perspective, how do you use factors? There's a significant amount of academic research out there on how do you look at factor investing, growth, value, momentum, low vol. So I think there's a lot of reasons for great academic research. I've heard some great presentations today. And sometimes they challenge us. They challenge the industry. They challenge us on different aspects of the ETF business. And that to me is extremely valuable because as somebody who runs a business, if there's questions out there on whether it's the ETF structure, the ETF market structure, whatever it is, we want to hear them. We want to be able to address them. We want to understand if they're real challenges or if we can help educate about what maybe some of the misinformation can be, because that does happen in the marketplace. And I'm not specifically on academic research as much as maybe the media sometimes.
Right. Well, I mean, and you're absolutely right. I'm glad that you brought that up because there is always a narrative and a message that's trying to be delivered. And it's rare that you have academia challenging you on that. So I think that is helpful to get that kind of feedback. But you had mentioned ESG investing being a big trend. I'm also hearing a lot about factor-based investing. That seems to be this, smart beta was very 2017. Now, factor-based investing is 2018, 2019.
Yeah, I mean, factor-based investing is really giving the investor choice about which factors they see. And there's two different kinds. There's single factors, and then there's, in certain cases, we'll package and take multi-factors. We have a set of products that does that, where we'll bring different factors together and say, these three, over the long term, if you invest for the long term, have proven to have a better outcome for investors. I think one of the challenges for factor investing, and I have the same view on smart beta, is that it usually works successfully over a full market cycle. So you have to make sure as an investor you have that commitment. A lot of these trends started in the institutional world where they have a long view. And where I worry about some of the things I've seen in smart beta is you don't necessarily have the investor hold it for the full market cycle and get the benefit of having low vol during a time when they really, really need it.
All right. Well, thank you so much, Jim, for joining us at Synapse today. And thank you for joining me throughout the day from Philadelphia. I'm Jill Malandrino, Global Marketing